Okay, hey guys, Sam here with you on Tuesday, October 2nd. And next up, by request from our members, is a look at GE. Now, as I will always remind you, whenever you're looking at traditional assets, you really want to look longer term, right? So I've got a weekly chart up here of GE. Now, you can see I've got a count on it here on this move up. Very hard to dig that out here when you're just looking at in regular algorithmic scale. So I'm going to go to logarithmic scale here, and it gets a little easier to dig the count out here. You get the separation here as you get the compression on the higher levels. So we can see there's a very reasonable 1, 2, 3, 4, and it looks like we've got an extension, and some of this was amazingly technical. So even just in here, pulling from the length of the 1 from the 2, we come exactly to the 618, right into the hot box where you'd expect the wave 3. So we get a 3 down, we go for the 4. So I know it's hard on your eye. It doesn't make sense because of the compression, but then equally, right, if you look here from the 2 to the 3, get that right on there. We come to the 38, go right to the Vegas wave, and then we get a huge move up from that. And as if I recall, I think this also from our 2 to our 3, get that right on there. We come right to the 50, and then we get algo target and through all of them. So very technical, no surprise there. So we have a completed count here. Now, to get the downside, I'm going to take it out of log scale here, just because this is worth noting here. So we clearly have a significant top up here. Now, coming out of that here, all right. Now remember, I'm on a weekly chart. So you think, oh, this stuff's not going to work on this long time frame. So I'm just going to take just the straight algo pull there. All right. So swing high, swing low. What do? Right to the 50. Boom, we get 2 and actually through target, right? No question they got paid there. All right, so you look at that and you say, okay, so we hit the 50 in September of 2017, and we put in that low of March 16, right? So let's see, do I have that right? Wait a second here. Yeah, so that's, I don't have that right. So that's October of 07, pardon me. Not 17, 07. We put in the low at 09. So that's a 2-year move down in GE from that 50, from that algo sell, right? They get to and through rather comfortably. Now, here's where it gets tricky. So at this point, you might look here and say, oh, well, okay, here's my next pull. Well, so you look at this and you think, okay, so next up, right, as you would, right, you would anticipate here's the next up, the next trade would be at this 50. Yeah, we got a little reaction there. Here's the 618, reaction there. Golden zone, reaction there. Eventually, they get through it. So now you're thinking, well, wait a minute. If we're through the 65, well, then bull's ball, right? So the next trade, and certainly there would have been algos in this move, right? There would have been buyers here. So let me take this one off, right? So if we come here, so almost a very slow reaction here, and they rip right through. Now we have gone to the 786, but any buys here would clearly have been stopped out, right? But I show you this as a reminder. You can't forget about the all the way halfway back. So particularly when you see this kind of movement, you've got to check this relative to this, because they will also use that as that is a dominant pivot. So when I go swing high to swing low, what do? Right, 50 to the tick, right, and that's still going. So, you've got to check these, right? It's always a question of what did the algos do last. So we don't have to wonder what happened there, right? We don't have to wonder. We know that algorithms sold that. Now, here's their target down here, but that's below 0. Here's 0 here. So this is a target that will be unrealized. So what do we do with that? Well, of course, we would be looking on the way back. Do we have anything here? Well, no algos here, at least on this time frame. So we have no help from an algorithm being a buyer. So no question, bears are in control. So where are we headed next? Well, okay, let's go look at that. So just looking here, just even on a weekly. Well, I'll go from a weekly to a daily. Let's see if I can do it here on a daily. If I can get this to populate. Okay, so can I do it on a daily? Yeah, I can. Okay, so here's that low that I was looking for. All right, so here's that low. So it looks like coming off of this, that I can just write off, see, it looks like I've got a diagonal coming here. So looks like we can go 1, 2, 3, 4, 5. So that would be, so here, I'll show it to you. So it would be 1, 2, 3, 4, 5 here into a 1 wave. So on the larger degree, we'd have our diagonal in here. We'd have a 2, we'd have a potential 3. Looks like that would be 4, and we'd be going into 5. So let's get that up a degree and get that. Give me a second here. Go to micro for that. Okay. So does that make sense? All right, let's open it up here. So this, we have a good candidate. So we get the overlap of the 1 here. So we get an A, B, C into our 3rd here. And it looks like we have A, B, C again into our 5th. So I have this leading diagonal here for my 1 wave. All right, of course, we're going to check the 2 wave. So we're going to take it from that low to my proposed wave 1 high here. Well, nice. Looks like a little front run here on the 50 here as we come down to this. Little front run on the 50. Now they're 2 and through and got second target. Well, let's just see how, if this is technical on the way up. Well, of course, we had this one here. So as is often the case here, we'll look from both pivots. So if I look here, that's into golden zone. Look at this. So we go from golden zone right to, there's a little front run on that target reaction. Okay, so now we pull here. Right, so this, we're going to go all the way back. All right, so this is the next one we'd look at. So remember, we look all the way back. We're looking for a 2 between the 50 and the 618. Looks like this is a little front run, 2 and through, got second target. So I have the ingredients here. So I have my good leading diagonal. I've got my 2 wave. I've got a candidate. Now looking here, you can look. We look at this and we say, well, wait a minute. Let's check the length of the 1 relative to the 3rd. So we pull that over and you go, oh, hey, man, that can't be right? The first wave is longer. Well, remember, 3rd wave does not have to be the longest, just can't be the shortest. So granted, we have this, we would have an extension in the 1. 3rd is not longer than the 1, but what matters now that I have 5 is how does the 3rd relate to the 5th? Okay, so we pull that up and we go from this low here, and it doesn't quite make it. So the 5th in this sequence here, 5th is the shortest, 1 is the longest, right? But we still, so note here, if this is as our wave 1, so we have yet again another diagonal, right? So we have a leading diagonal into the 1 wave, and then we have here another diagonal. So we have a candidate for this to have just completed a 1 wave. Well, let's check this, right? So with this overlap here, we've got to check this too. So I would do 2 things. I'd be checking for the all the way halfway back, but I'd also check from the 2 to the 3. Well, let's start there, looking from the 2 to the 3. How do we look here? Right? So what do? Right to the 618 to the tick. Right? So algos get it again. Right? It's just over and over, right? Every video I do. There is no, I've done over 600 videos. There's never been a video where we couldn't find that. So there it is, to the tick, right? 618 to the tick, scream up. They get target right here. It's got a little more backwash into it. Eventually, now we roll over. So that's what you would call a pretty substantial reaction. So given that, we know it's incredibly technical. No question. We know it's algo driven. That we have a candidate here for a completed 1 wave. All right, well, let's see if that would make sense. If this is a completed 1 wave, we're looking for a 2 down here somewhere. 3, 4, and 5, just placeholders. Let me change that color, and we'll go up a degree or 2. So let's see if this would make sense. Okay, so potentially now we have a leading diagonal here as part of a leading diagonal. So all in all we've got is just a big potential 1 wave. A possible 1 wave. So pulling from the length of the entire thing, well, we've come down and we've tapped the 786, actually broke it. So we have a candidate here for a 2, although that's an awfully ugly move off of that. And in fact, if you really look at it, it looks more like there's 5 in here. So it looks like that could be 1, 2, likely 3, 4. I guess we put the 5 in there. So let me get that. Let's go back to white, and we'll go back down to submicro. Okay, so now the length of that 5 looks a little suspect relative to the length of the 3rd, but a little bit more closely aligned with the length of the 1, if that is a 5 wave. So let's just check that. So let's look at the length of the 1 projected from the 4. Right, well, we're just shy of parity, almost exactly the same length. And we can see here this looks like a diagonal to finish this. So let me go down. Oh, let's go to a 2 hour. See how if we can get a diagonal dug out of that. All right, so let's zoom in here. All right, let me bring this up here so we can see it a little better. That's not what I want. I just want to do that. Okay, so if that's a good 4, well, looks like maybe could we have 1, 2? Well, that looks like that could be A, B. So I'll have to check this here. We'll have to measure it. So let's get this off to the side. Get this down here, and we'll go to yellow. We'll go all the way. All right, so let's just check that, see if that would qualify here. So we're going to take just first thing we got to check. We know 1 is not going to be longer than 3, but how do we relate to 5? Okay, so we're clear there. So length of the 1. So just same thing every time. So we got two. This is what I wanted to see. How does the 1 relate to where we are here? So 1, 2, we've already overlapped here. So the alternate would be that all we've done is put in the 3. So this would all be still yet to come since we've had this big reaction. So 5 would be down. That's too small. Let me get that so we can see it. Let's get that. We'll get that in micro. So potentially now, so this would be the 3 here, 4 going in. There's one more move down. So so potentially now that all of this would move over. So we're getting tougher to call it a 2, considering the depth. As we know, this is the 786. So if this is going to have one more push down, that we don't want to give it too much beyond that because the probability of that playing as a 2 gets reduced. So let's look here for 2 things. So as it's a diagonal, we want to look for the length, right? So as it's a diagonal, we've already overlapped the 1 wave here. We want to look, just as I showed you previously, we want to look for the start of the 1 wave through the pivot of the 3rd, looking for 50 is ideal for us to get a reaction here. Now, is that a front run? Maybe, but it looks like it's a little bit shallow. So it looks like there may be an A wave going in yet. So I don't think we have anything just yet. Right, it wouldn't necessarily be a buyer because there's not enough. The risk reward of that kind of a trade doesn't look good enough. Let me raise this up a degree here so it fits. All right, so potentially now 1, 2, A, B, C. So we'd have A, B, C into our 3rd. I'd be watching for this 50, just look for a reaction there to trade for the potential. I don't know that I'd necessarily be shorting it here for the 4 into the 5, but if we're gonna put in a 2, now we're pushing the 887. So if I go back to the daily and we think about that as a potential 2 wave, wait. So how would we count that? So this would have to be an ABC. So if this is a 1, we're looking for an ABC. This looks much more like 5 to me. So bottom line, I don't really think there is a trade here. Right? So people that are looking at this, I know it's tempting to think, shit, man, GE's down to $11. That's got to be a good time to buy it. But technically, you haven't completed here. We don't have a 5 to complete, so that would suggest that lower prices are still to come. I've got to, can I squeeze this in here enough here? Yeah, so, and if I work from that low, could that be a 2? Well, we're getting up here, right? So let me get the 887 on that. So if we get the 887 on it, we'd be holding that. It's, again, right, so if you liked it at 11, you're going to love it down here at 9. So, I mean, I just don't see enough of a reason to chase that yet. What I'd rather wait and see. So, because it looks like I've got 5, so that would imply that the higher probability that we're going to have some sort of an A, some sort of a B, and some sort of a C to correct this 5. But we're running out of room. All right, how are we going to do that? So we've already been through the 786. So we're going to get an A, B. Where's that C going, right? So we're $5. It's almost hard to get a decent count. There's almost no reason to put together a buy side here. So if that's a 5, that has to be an A wave. So there's no good trade here. So if this is the A wave coming in, we're going to have to wait for you'd have to be trading the B wave with the expectation that you're going to come back down and visit. Maybe you're going to the 887. Maybe there's a double bottom down here, but I just can't say that I love that. So this looks much more like an A wave. So if I were trading this, I'd look for this 5th to complete. Right? So just to be clear, I'm not trading this. I'm just analyzing it here by request. But if I were in this or looking for an opportunity, I'd want to wait for this 5 wave to finish. That's what I'd be looking for, and then perhaps if we get a move off of this as a completed A wave, and then we get a motive wave here. So if this completes as an A wave down, well, we'd be looking for an A wave in our B wave of the larger degree. So if we were to come off of this and get either an impulse or a leading diagonal into a, let's call it an A wave, there's going to be we'd be looking for a 3 wave into the B. So that's the trade that, if you're looking for the buy side, that I would consider the next opportunity here, is to trade the B into the C, knowing full well that when that thing comes back up. So again, I'm just hypothetical here. If we were to pivot down here, let's say we're going to use let's use the algo target here. right? So we're going to run into, so let me get this off of here so it clears it up. So we know we're going to run into serious resistance right there, right? So algos will kick in, looking to sell that with a, if we were to get up here with this as a target, right? So that would be a $4 target. But we would at least have completed the pattern, right? So that would be, we'd be back to and potentially through this. Look here. So we'd be back to and through this, the ’09 lows here, the financial crisis lows. So my first thought is why would you be in here trading this? This is just looks horrible. But if you're in it, or you're kind of coming into it with the approach of, you know, look how far that's gone. You know, we're down here at $11. The all-time high is at $60. A lot of upside. I mean, that's not an unreasonable way to think of it. Or I don't mean to belittle that kind of thinking. That's certainly not an invalid way to consider, right? On the assumption that GE is not going out of business, that if you can buy it down here at these kind of levels, that if you had a longer term horizon, buying it down here at 10, 12, $11, long term probably just fine. But technically, if you're trying to time the entry, I don't know what you're basing that off of. There's nothing from an Elliott perspective. There's nothing from just a straight algo pull perspective. There's no algo that we're behind working for us until we get a move off of a low here and we get the first retrace. That's the only move that's there. So assuming we get a low down here, the first trade that's there, you'd be trading into the B wave here. So you'd be looking for this golden zone. Look at that, drew it just by hand. So you'd be going from that swing low down here, then you'd be trading for this move, knowing that it's likely just the C wave of a larger B wave, right? With this ultimately resolving at least to challenge these old lows. That's what I see, right? So here's the next trade, and that could be a long wait to get there. So I would certainly make some alerts here if we were to take out that wave 2 swing high. If I go down in here, if we take this pivot here out, well, that changes the count. I'd be paying attention to that. So that's not a reason. That's a reasonable place to get an alert, just to know that we've had something radical happen there that's changed the count. Otherwise, it just seems like all we're doing here is just setting up for one more move down to complete the A wave. Right. So if bottom line, if you don't have to trade this, I don't see any reason to. There's no shortage of things to trade. They're going to set up better technically. If you're in it or you have a long-term position, I think you got to wait here. At least get an algo on your side. So that's my view there. All right, guys, I'm going to wrap there. That'll 3 traditionals here. We remind you guys, as we sit here in this now going into our 10th month of a crypto bear. Don't be afraid of the other asset classes here, particularly in FX, where it's very, very easy to open an account. You can have an account open in 10 minutes, and you can fund it with your Bitcoin. In fact, I'm going to do some videos to walk you through that process so you understand how easy that is to do. And you don't have to sell your Bitcoin. You can open your account with Bitcoin. So it's easy to do, and it open up other markets to you while we all wait for the next bull move to begin in crypto. Which, listen, that could be. That could be. There's no telling when it comes, right? We could stay in this bear market certainly through the rest of the year. How about we say that? That certainly is not out of bounds of what we may be seeing here. It could go longer than that. So while that's happening, there's so much opportunity in other markets. We just strongly want to encourage you to consider looking outside of crypto, right? And so if your thought is, oh shit, man, that means I got to open up another account and go through all of that. It's very easy to do it in FX. They want to make it easy for you. You can have an account funded and open again within 10-15 minutes. So don't let that discourage you. And the other advantage of working with an FX broker, you can trade in minis and micros. So you don't have to post the kind of margin. So if you were looking at CFDs, right? So I just did a video on gold, right? So you think, well, shit, I got to open a futures account and I got to post margin. If I'm going to hold that, then I got to post am I trading 1 lot, 2 lot, 3 lot? How much margin can I post towards that? If you're trading in a CFD, you can trade minis or micros. So it's much lower capital requirement. It still allows you to trade this methodology. Here I've shown countless examples of how technical FX is, and we see the same thing, right? The underlying asset does not matter. I've said that I don't know how many times. They all trade exactly the same way. Right? They're all algo driven. It's all just fear and greed. And Elliott Wave is just, again, as I will often remind you, just a way to organize that human emotion. Right? Right? A little greed, a whole lot of fear. Right? Little greed, more fear. It's all it is. It's all it is. There's no voodoo. It's no magic. It's just a bar chart representing human emotion. It's as simple as that. And it's just a way to organize the chaos. It's not infallible. It's right. I mean, Elliott wave counts are changing all the time. Right, but it at least gives you a way to structure what's happening in the market. So we look for confluence between that kind of an Elliott pattern with a fib pole, with some market geometry. It's putting all of those components together to create a probability zone where you have confluence. Right, and that's all we're looking for. I could care less what the chart is. I really could. Is it technical? Is it trade? Where are we in the larger count? Can I identify a count? Do I have a high probability zone? As to what the asset is, as long as it's liquid, as long as I can get decent fills, as long as it's trading technically, again, why do you care? You're a trader. What do you want? You want volatility. You want to know that if you're in the market, you don't have to worry about whether your stop's going to get hit. You want it to be just as easy to be long or short. All right, that's not crypto. That is FX. And again, much lower margin requirements. All right, guys, with that, I'll wrap. You can always learn more about everything that we offer either by following us on Twitter. You can go over to our website, tradedevils.com. There's links right underneath this video. You can come over to our public Discord. That's free to join. You can sort of get a feel for what we're all about. All those good options. You can always write to us. If you have questions, you will get a reply. All right, guys, with that, I will wrap, and we'll be back to you tomorrow.